Starbucks just reporting mixed third quarter results. The coffee giant same-store sales falling 3%. That is slightly worse than expected. Placer AI head of analytical research, RJ Hottovy, joins us now with the reaction to the print. RJ, it's always good to see you. So looking at the stock, it's actually popping about 2% here in the after hours, RJ. But let's start with your response to the print, RJ. What'd you make of it?
Yeah, looking at the numbers, I mean, I think the U.S., I think a lot of investors were bracing for the worst after last quarter in terms of visitation trends. They came in slightly better than at least the consensus numbers that I've seen. Maybe a little bit of relief on that. Still negative, obviously, -6 in terms of comparable transactions. So this company still got some things to work out, but positive sequential momentum and maybe some evidence that some of the things they're working on in terms of new product innovation, in terms of discounting and value, maybe paying off and driving more visits. So initial reaction, still a lot of work to do for the company, but also some progress compared to last quarter.
And what is your data showing you in terms of what how are traffic trends looking at Starbucks and in terms of what people are spending as well?
Yeah, so our data, if we adjust for the 5% new stores that are in the system compared to last year, we're generally showing visitation trends down year over year as well. But the important thing, too, is that one of the things that the company's focused on is bringing back more of the occasional users. And we did start to see a bit of progress on that as the quarter progressed. Some of that lined up with the promotion, some of that lined up with some of the new summer beverages that they launched. We are starting to see a little bit of encouraging that those kind of everyday, kind of occasional users are starting to come back. I wouldn't say it was in droves, but certainly some positive momentum on that. And so the company continues to see more visitors than ever before, just getting frequency, encouraging more frequent visits, which I think a lot of the initiatives that they have, if given time to play out, will start to do that.
RJ, activists are involved in this name. Got Paul Singer involved in his firm. To the extent they have an undisclosed stake per the Journal. I'm just curious to the extent that they want to see changes. You know the company very well, RJ. What kind of changes, if they do press for them, would you think they may emphasize?
Yeah, and Elliot's a smart group too, so I'm sure they've got some big vision for the company here too. My thought is really just kind of getting that occasional user. We've seen Starbucks, a lot more competition from the likes of Dutch Bros, some of the more private coffee chains coming up, even more competition from QSR and other channels as well. How do you get that brand back in focus? How do you bring people back into those stores more frequently too? I think that's kind of the big message. We've seen a lot of changes in consumer behavior. That's what our data shows. A lot more people coming into different day parts, people wanting different things, people wanting new innovation. And I think that Starbucks is starting to act upon that, but maybe not to the same degree that they need here too. So, probably more in terms of innovation. The company talked about efficiency in the press release. Throughput during peak hours has always been an issue here. That's another thing that I think they can work on. Better balance between the in-store experience and the digital mobile ordering app. I think that's certainly something that the company needs to look at. So if I'm going through the checklist of probably what they're looking at, it's probably looking a lot like that.
And it's interesting because when they said efficiency in the release, I think not only of throughput and like getting your coffee when you want your coffee and not encountering the scrum there, but also them saving money. So my question was sort of, how do they, be cost effective while at the same time improving on those things that you're talking about, like innovation and like throughput?
It's a broad-based effort, to be honest. And I think the company has made inroads into some of the things they need to do there. And really, with the company, if you think about it, it was built on the third place experience. It was this place away from home and work and built on this experience. But, over the last decade, obviously, convenience and mobile ordering has come in. And really, the company is trying to serve two different audiences at the same time, the experience customer as well as the mobile ordering customer. And so I think a lot of that efficiency comes down to identifying what store serves what need. And so you might have an experience store, a larger format store, even one of the roasteries, and across the corner, you may have a smaller format store. And I think some of the things they're doing in terms of mobile only pickup type locations, smaller format, I think you can start to better address consumer need states with the different locations that they have. And, when we do see similar, locations located nearby, we do, and they clearly have a need state served, we do see some positive or some really encouraging visitation trends when we look at that. So that's one of the things I think they need to address here.
RJ, we talk about Starbucks, obviously the giant. What about its smaller rivals, Dutch Brothers, for example? How are they performing? What are you seeing there?
Yeah, we're seeing some positive traffic trends. And to be honest, Dutch Bros and many of its other competitors, kind of in the drive-through small box coffee space, are generally outperforming the category and outperforming Starbucks at this time. I think some of this has to do with picking the right markets. Dutch Bros is going into markets where we generally see underserved markets, so kind of the Tennessee, Missouri, Oklahoma space, generally underserved in terms of coffee visitation. So I think that they're in the picking the right markets. They're also doing a good job kind of addressing the move away from urban to more suburban and rural locations. I've done a good job with that, but also good job with menu innovation, good job with throughput. They're kind of doing the things that Starbucks needs to look to in terms of just the whole package here: innovation, experience, throughput, doing a lot of things right there. So our data says some pretty encouraging numbers for Dutch Bros and a lot of their competitors.
RJ, thanks a lot. Good to see you.
Absolutely. Thanks.